Jordan Belfort, the Wolf of Wall Street, in the Wolf's Den. Got a very, very cool announcement to make about the Wolf's Den. So if you notice, I'm starting to have more and more guests in the financial arena. The reason for that is I am going to be launching a new podcast very soon called The Wolf of Crypto, because I have been getting inundated with requests for what should I buy? What should I not buy? What do you think about Bitcoin? What do you think about decentralized finance? Is it going to last? Is it a fad? What do you think of shitcoins? Should I buy this shitcoin or that shit? All this stuff, right? So the time has come for me to launch a podcast that is strictly about crypto, education, enlightenment, with some major players on. I'm going to have some really big players, the major forces in the field, people that are the most successful prognosticators of crypto, people that are early adopters that have been recommending this publicly since it was, in its nascent stage, when a couple $100 a coin, and along with people who are just the sort of average, everyday people that became super rich by investing in Bitcoin and Ethereum, their stories as well. So that podcast, The Wolf of Crypto, is going to launch very soon. So in the meantime, I'm starting to have mostly financial guests, and I got a couple of older things that haven't been released yet. I got one wacky podcast I created with a woman who's notorious train wreck. I don't mean that in the worst sense, probably the better sense of it. She's a train wreck. So that will come out too, but I'm gravitating heavily towards going to the Wolf of Crypto. So today's guest, Jason Tartick, does a lot of stuff in the financial education world. He does stuff in crypto, regular stuff. So what I love about Jason is that he's really into this idea that education is a must if you want to invest in the market. I think one of the biggest problems out there right now is the fact that people are diving into a market that they really don't understand. They don't know where stock comes from, how crypto is created, and they're just sort of buying these momentum plays in meme stocks and what their friends said and what their friend's hairdresser said, versus really understanding why they're buying, why things go up, why things go down, and taking a bit more of a long-term and less speculative horizon. All right, so with that, let's hear from my man Jason Tartick right now. So Jason, thanks for coming on the show. I love what you're doing. Tell me, what gave you the idea in terms of starting a financial literacy platform instead of just trying to do the old hit and run job? You're trying to educate people. What was the genesis of that?
Yeah, for sure. So I was a corporate banker for 10 years, and then I took, of all things, a leap of faith into reality TV. The old dating show, The Bachelorette. Talk about A to Z jumping off the cliff. And after I did that, I built this platform I didn't even know kind of how to manage or what a platform would be, really. I didn't even understand it. And so quickly I learned that you got to find a way to differentiate yourself. And the dating show was just a very small portion of my story. So quickly when, COVID hit, April 2020, all the markets are getting clobbered. I pulled my audience, which is mostly predominantly like 18 to like 40, let's say. And I said to them, guys, every headline right now, all we're seeing is S&P 500 and Dow Jones. Be honest with me. Don't fuck with me. Be honest. Yes or no. If your mother, your father, your cousin, your sister came up to you and said, just tell me what the S&P 500 is or the Dow Jones is, could you do it? And I want you to predict, before I give you the answer, Jordan, I want you to predict, how many people do you think said that they could do it effectively?
50%. Said, wait, I'm saying, said or could. I'm saying thought they could or could.
They answered yes or no. Yes, I can explain a little bit what the S&P 500 Dow Jones is. How many people?
I would say
90. I'm not going to tell you.
I was going to say 50+%, and then 0.1% actually could. That was my guess.
Oh, I like that. I like the change. So over 250,000 people respond. 91% of them were honest and said they could not do it.
Okay.
And so that was eye-opening, right? And so from that, we've created a podcast. We're writing books. We have a full consulting company.
Let me interrupt you for a second. Let me ask you a question, though. Okay, but here's my thesis on this.
Sure. 91%
said they couldn't. Of the 9% that said they could, how many actually could? Like that's the question.
A good point.
My point is, I think a lot of people think they understand things, because especially in a bull market, a rising tide lifts all ships. So, some guy goes out there, he trades a couple of things. He's an expert at crypto. He's an expert at trading meme stocks. And it's simply just being on, the right side of a massive bull market. I've been around for, I hate to say it because it's fucking, I'm old, but I have seen this. Like, I've been through so many markets like this where, it's just like, actually, I entered the stock market in 1987, right?
Okay.
And it was the terminal year of a 5-year bull market. Now, everything has changed, and I don't think people realize this, that there's been this shift in fiscal policy that started after 9/11. And it sort of was this sort of 1-2 punch that started with the dot-com bubble bursting, and then right on the heels of that, you had 9/11. And it was in that moment that George Bush W, right, George W. Bush, got on TV and said, if you stop shopping, the terrorists win. And they kept interest rates, at this unbelievably low rate, and they just sort of flooded the economy with money and then never looked back. And then it sort of led up to this sort of, the bubble that happened in 2008 with housing, where they, made it so easy to get loans. And if you look at it, there's been like this whole kick the can down the road with fiscal policy. But my point is that before that, it was like there was bull markets and bear markets. It was like 82 to 87 was because Reagan came in, cut interest rates. But before that, the 70s really, really sucked. So what do you think about like this whole idea now? Like, we're in this long, extended, low interest rate environment. Do you think at some point there's going to be hell to pay?
It has to be. So you brought up .com and 9/11. Obviously, let's talk a little bit about the mortgage crisis. Like, huge spike, right? Like the whole country turned upside down. Almost the whole world turned upside down.
Right.
I think I don't know if people realize how much power politicians have, but every politician is terrified right now to have their name associated, in my opinion, with another 2008. And so you think we saw regulation then. Imagine what we're seeing now. The big question, to your point, is how can you sustain this? How can you sustain continuing to print money, continuing to keep interest rates at such a low rate? It's impossible. You're seeing, if you look at almost every indicator, I'm going to give you two indicators, from literally just residential housing, the price at which these houses are selling, the ease at what it is to get money, all the way to, ready for this, all the way to Las Vegas, right? Publicly traded companies, MGM, go to their high limit roller rooms, right? 2 years ago, $100 to play in those tables. Now it's all 500 mins. It doesn't matter what indicator you look at. Everything is moving up, and it's tough to keep up with it.
There's two ways for us to have a conversation, because I think we could talk forever about this shit, right? One way is to talk about everything that's wrong, because there is so much wrong, and there's like some rot underneath. It's like, it looks pretty on the outside. Everyone feels like there's something rotten in the middle of it. But the more empowering version of this podcast would be, okay, what do you do about it as an investor? How do you, knowing that, right? Mm-hmm. Knowing that, how do you, if you're just a brand new investor, start investing? And if you're already investing, how do you diversify your portfolio? What should you be investing in? What things should you be looking out for? What's the process which you go about educating people? Let's go through step one. What's the first thing?
Yeah, I think first thing, whether it's 101 or you're as sophisticated as a day trader and you do it for a living, is the whole get rich scheme thing. Like, get that out of your head, right? Before you do anything, you have to put your time in. You have to do your research. I had Gary Vee on yesterday. We were talking all about NFTs. Soup to nuts. I said, okay, listen, Gary Vee, there's going to be a ton of people that listen to this podcast that don't know what a NFT is. And just for the fun of this conversation, Jordan, I went on my Instagram. I polled my audience again, and about 86% of them said they couldn't explain what an NFT is. So I said to him, how do people get started in these new opportunities? His exact answer was 30 to 40 hours of research. Do not put $1 into anything until you're doing your due diligence and you're doing your research. And I think whether it's NFTs, it's cryptocurrency, it's looking at the next best stock, you have to do your research and you have to partner with people that do have the time. I'll give you an example. I'm busy. I got a lot of shit going. I know, Jordan, it's 9 a.m. over there and you've had 6 meetings. You're the same way. How the hell can I sit there and analyze the market every single second of the day and be an active day trader? I can't. I could be a swing trader at best. What do? I hired a day trader. I have a guy that works on my team, Ashton Nolan. Every single second of the day, he is plugging through everything. And I got a full report today. I mean, I could tell you right now, he's looking at Uber because 67% of analysts are seeing upside. He's watching for the bounce off $43. For small cap, he's looking at Open Door. He said there's a huge gap after positive earnings yesterday. So I think in general, if you're not partnering with the experts in all the different fields there are to find investments, crypto, NFT, small caps, large caps, penny stocks, you're doing yourself a disservice. And it's the easiest way in the world to connect with people.
No, it's a good point. And so I always say that, listen, I say, it's one thing if you're going to literally sit there and learn this shit, at the deepest level, be connected, have access to all the latest information. Then you could do some short-term trading. But in the absence of that, you really need to be looking at a longer-term horizon. If you don't have that much time, to me, it's far more savvy for a person to sit there and sort of more buy and hold strategy. Because if you can't look at this stuff, if you need to sort of set it and forget it, to try to have this ultra short-term mentality, to me, is very, very dangerous. What do you think about that?
I think you're 100% right. And I think the thing is, like, before we started the show, a little behind the scenes, guys, we were talking about a big deal, 10 million plus the Jordan's talking about, right? Now, if we go and take the opposite of that and we talk about retail investors, who are the people that are now in the game, Jordan, I don't know if you're seeing it when you're doing your TikToks or you're having guests on, but the same people that are trying to put all these strategies together of how to get rich quick and make these plays at certain stocks are the same people when you talk to them for 5 minutes and you ask them about what their financial profile looks like, they're buried in debt, right? So we got to take care of your debt before you start worrying about making millions and millions of dollars. What are your thoughts on that?
Yeah, I mean, I think that the problem that most people have is that if you're trying to invest to make money, like to sort of get rich by being an investor, and you're not sophisticated enough to really play the game at the highest level, you're forced to try. If you're trying to trade to make money so you can pay your bills and live your life, it's insanity. So in other words, like, the far better version of that is let's say you have a business that makes you money and it throws off excess cash, so you want to put that cash flow to work in the market. That, to me, makes a lot more sense than someone trying to trade to make money. Like, trading to make money to pay your bills is first of all, number one, the old rule on Wall Street is the worst trader is a fearful trader. If you're trading with scared money loses almost every single time, right? So I think what happens with a lot of people is they're overexposed, they're over-leveraged, they're trading with money either they don't really have or they can't afford to lose. So they make these knee-jerk emotional decisions. I think that's number one huge mistake. Number two is, I'll give you an example. This is a great one. I was in Italy giving a speech not that long ago, and we were talking about crypto. It's a private dinner after the event. There was 32 people there. And I said, who here owns crypto? Mm-hmm. And about two of the 30, because it was a bit of an older crowd, two people raised their hand. One was a young girl, 18 or 19 years old. I said, what do you own? She goes, Dogecoin. I said, how are you doing? She said, I lost all my money. I'm down to nothing. I've lost $25,000. I said, why'd you buy it? Guess what she said?
Tell me it's Elon Musk or Saturday Night Live.
Elon Musk said so. Okay? Okay, you got it. You got hit it on the freaking head. Now, I like Elon Musk. He's a solid guy. He's a world-class entrepreneur. I don't think he realizes that his little joke and fun stuff is causing a lot of people massive pain, right? But that's a classic example of someone that just should not be investing in those sorts of things. They have no idea what they're investing in. Here's the thing. If you ask the average person, hey, where does a stock come from? Where did that stock come from? How did it get there? They're like, oh, what do you mean? It's a stock. No, what does it represent? How did it come into, how was it born? What's the here's how babies are born. Man and woman get together, they go into bed, they have sex, and 9 months later, a fucking baby comes out,
That's
right?
What happens.
Well, in reality, stocks are not that different in the sense that, a company goes in, they register with the SEC, right? They go, and 9 months later, shares come by. You actually could draw a parallel on how a stock's born. What is a stock? And you're right. That's why it's so funny that you asked that question, because I'm about to write a book right now. I just signed a contract with a publisher, right, to write another book. I hate writing, but I have to write this book. And the reason is exactly, we're on the same page. I'm like, people don't know what the fuck they're doing. They don't know
No idea.
about the stock. They have no idea. I'm like, how is this possible to not be financially literate and everyone's investing in the freaking stock market? It's insane, right? So
and the
it's,
people
right?
that are making money off it are the people at the top, right? Because as a retail investor, and you know this, unless you're moving big dollars, you're going to get completely taken advantage of with the spread, the hits, etc. And companies like Robinhood are going to make a shit ton of money around it.
Here's another analogy. Yeah, I'm going to cut you off. So keep going. I'm sorry. So we have so much to fucking say.
I just have one more analogy I want to bring up,
please.
because based on your listenership, some people are like, you're probably talking way above me or below me. So I think one thing you mentioned is huge. You could have all the technical and fundamental analysis under your table. You can have an MBA, you could have 20 years in this. But still, those people at the very top who are so educated still can't manage exactly what you just said, which is kind of the whole emotions of day trading and emotions of investing. And I think the most basic ass example I could give is, and everyone can relate to this, is you have a boyfriend, a girlfriend, a wife, a husband, whatever you may have. Think about that time you're in a fight, or there was a jealousy issue, or there was something you need an answer to. And you're saying in your brain, you're like, don't text her, don't text him, don't do this, don't call. And you do it 100 times, right? Because you can't control that emotion. When money's on the line, which is the most important commodity in the world that like people are dying over every day, it's magnified 100 times, right?
Yeah, it's a great analogy, because I mean, it's with all things, in the sense that like when you're even in a heated business deal with someone, like I'm in a business deal with someone and like I'm pissed off. I know they're doing something, and you're just saying, I know I should keep it to myself. I gotta fucking play the fucking quiet game. Just don't fucking reveal your hand. And after you have to because it's human nature is to want to act and react. You know what I'm saying? Sure. It's very, very true. So I think I was going to say something before. I forgot what it was. We were talking about something about people. No. We were talking about people like investing in the Robinhood, and like what happens is they typically, the analogy I was going to use. I have a very good friend of mine. He's a hell of a nice guy, and he went on a gambling spree, and he got hot. And he won a lot of money. I'm talking millions and millions of dollars, right? And I've seen this happen many times in the past. I have some friends that are big gamblers over the years where they'll just suddenly be playing blackjack or craps. Typically, it's blackjack that when they get hot. And they'll win like $4, $5, $6 million. They'll win 500,000, 800. It's almost like they can't lose. They might go down once, but they pop back up at the end of it, and they always win 300,000 more. And they're up like 5 million. And they're like, it's like they can't lose. Every single time, without fail, they lose 10 million in the end. It always ends up in tears at the end. All right. And I think the analogy is what happens with a lot of these young kids trading in the market is they go out there and they'll get lucky and they'll hit a couple, whether it's a meme stock, they'll hit a good coin or something. And now we'll get to the little shit coin thing later, right? But they'll get involved in something, they'll make some money. And then, they'll leverage and they'll pair it up. But it always ends up in this same spot with their portfolio getting blown out and losing everything. And I think the reason for that is just they lack the understanding of what exactly is going on. So when you're mentoring people, is that your core business is what? You mentor young traders? How does it work?
Correct. So core business is that we're educating people on personal finance and career management, and we're doing it with many professionals like day traders and recruiters and myself. We have a business networking group that we do, and then we also have a podcast that correlates it, and social media that's making about 1 million impressions a day, and like a newsletter and stuff like that.
Okay. So what's the first step that you're doing when you you skew male, female? What's your kind of demographic? Average age, average.
So main demographics around it's actually predominantly females. It's around 90% females at this point.
Really?
Yeah.
Why is that? Because you're a sexy dude? What's going on?
Well, the platform was built from the show The Bachelor, Bachelorette. So the main audience was actually all females that watches that. So at one point, Jordan, it was 97% female. Since we've started doing more of the business stuff, it's actually decreased to like a 90-10 strategy. So it's around 90-10.
So you're coaching mostly female entrepreneurs or investors. What's your average person? An entrepreneur, an investor?
A lot of them are W-2 employees that are looking to get out and create some type of side hustle. A lot of them are stuck looking for a career detour. And I think the first place we start with all of them is something you already mentioned. The one girl who said, I own Dogecoin. Why do you own it? Elon Musk SNL, I lost my ass. You already brought up a great example about the casino. And that is an example I use all the time. Because if you don't understand your risk tolerance, if you don't understand how averse you are within your profile, how the hell can you ever invest? And you think about that. You'd go to the casino, you got 10 people in your group, you got one person who's willing to lose $5 million, and you have one person who's there just to get the free drinks off that person who's getting them because he's betting that much and they don't want to gamble a penny. And the biggest and first step with all these individuals is they want to just go, everyone just wants to, especially our generation, we want satisfaction and return instantly. We don't think before we do anything. We don't think before we talk socially on public media and think about that it's there forever. We don't think before we invest. We don't think before we pick our major. We don't think before we use our credit card debt, not pay. I mean, it's unbelievable to me, the lack of long-term thinking in our generation. And the first step is to say, think about what you're willing to lose. Let's talk about the swings high and low. If you give me 100 grand right now and we lost 30% of that, what would happen? And so that, in my opinion, is step one.
Got it. And then once you have someone that sort of enters your network, are you recommending specific stocks or more like strategies, like for like diversifying X into larger stocks, X into growth stocks, X into crypto, or how are you advising people? Like what's the strategies that you use?
For sure. So it's all the first step is all education based. So like understand A, B, and C. This is what it is. This is how it is. We are not advisors at all, and we do not manage any money. So the whole premise of it is educating, but we will tell you precisely what we're doing with our money. We will tell you the trades we're making, why we're making the trades, and the impact they could have. And like it's full disclosure. You got to do what you got to do, how you want to do it. And then people will pay a monthly membership to seek the information that we're providing on a daily basis.
Got it. And how much do you charge? You have different levels of memberships and stuff like that,
Yeah,
and
all
different benefits?
Exactly.
So what's the lowest entry point to what you're doing?
So the absolute like lowest entry point is around the like $9 to $19 range
per
a
month.
Yep.
And then on the highest level?
The highest is a few thousand per month.
And then, so there's some people that, like, for that, you're actually coaching them individually and stuff like that.
You're putting one-on-one plans together, one-on-one meetings. You're doing reviews on a monthly basis, et cetera. But in full disclosure, like probably where even the majority of the money here is being made is creating this niche within social media that has credibility, honesty, but also some solid acumen. So the big companies right now that are writing the big endorsement checks, there are only so many people in the financial influencing space, if you will, that have certain engagement and certain audience. And that's like where the big sum of money is coming in now. Explain that in more detail. Sure. So let's say, give me someone of your equivalent. So let's say it's you and give me a so you and Gary Vee, great example.
Right.
Okay. So you and Gary Vee, let's say you have the same exact social media platform. Okay. Same following, same engagement. Now, Gary
very
Vee
similar, by the way. Yeah. Very similar. Actually, the numbers are very close. Yeah.
Right. So, numbers are very close, but you're big into, just for the purpose of conversation, stock picking, trading. You're an investor. And let's just say Gary Vee is more, let's say, motivational speaking. Let's say it's more, he's big into NFTs. He has his own NFTs. You have different skill sets, right?
Sure.
The idea here is that, let's say JP Morgan comes out with a huge trading app. They are likely to pay you, Jordan, maybe a 5 to 10x premium over Gary Vee because of your specific niche with your history in investing, your history in trading, and people know that that's your thing. Sure. And so in the world of social media right now, the people that are carving out a specific niche that are credible and fit the kind of scale of what these companies are looking for, they're writing big checks to do endorsements and sponsorships.
All right, want to grow your business, diversify your content? You're not going to find a better tool out there than Melon for your live streaming needs. Blazing fast response time, low CPU usage, all available right in your browser. Go to melonapp.com/wolf and start streaming today. Give me an example of a company right now that you think that's running a platform like that is really empowering investors. Forget yourself for something. Like, would you look at? Is there some people that you would endorse that are out there educating people or providing trading services or investing advice that you think are really, really worth people looking at?
Yeah, 100%. So I think I'll give you two that I think are great. I think for people that are lost with their credit profile and their debt and refinancing, I think Credit Karma is an incredible app. They allow you to see what your rate should be and shop against all the big players to make sure that you're getting the best rate. I love a company like that that's working on the best interest of the consumer. Another one I think that's pretty impressive is Ellevest. Like I think what the Gates Foundation has done with that, empowering females and in investing. And guess what? If you don't know how to investing, we'll do it for you, but we'll explain what we're doing. I think they're great. And another app I think everyone should have is Personal Cap app that literally does all your budgeting for you. Budgeting is the biggest issue with every retail investor out there. And so it does all your investing for you. So those are three big ones.
Got it. And do you think that the first step, obviously, educate yourself, right? Second step, open up brokerage accounts and trading accounts, right? Do you have any preferred places that you think it, like, do you like Robinhood? Do you hate Robinhood? Do you like, E-Trade or what? Do you have any preferences on that and why?
I like using both like an app to trade some short-term smaller amounts. And then I would like to use I want a big brokerage like a Fidelity or an E-Trade because that's where you're going to get the best bang for your buck given the volume of what you're trading. One of the things we did is we actually invested and we partnered up with an app. So I have app ownership in a company called Fintron where you can do trading and it's very specific to education. So that's another cool thing in the social media space. You can leverage your following to do a lot of equity deals. And this is where I learned this deal.
Explain what I mean. Explain.
I'm going to explain a perfect example because this is where I learned it from, was when I interviewed Damon John, everyone knows Shark from Shark Tank, and him and I were talking about the best deals he's ever done in his career from a social media perspective, like how you landing these big things. Well, story number one was he had a big speaking event, live speaking event, big names behind it. They couldn't find one sponsor. No one would sponsor it. So they went to JP Morgan, and this is a lesson for anyone that's trying to market themselves. They say, JP Morgan, you could have the headline sponsor. We will put your name sticker everywhere. JP Morgan, these are huge names, we'll promote you. JP Morgan's like, hell yeah, let's do it. Free, by the way. Once they had JP Morgan do the headline sponsorship, they called on 150 sponsorships. Hey, these are the names we got. JP Morgan's a headline sponsor. They're paying for it, big bucks. Do you want to follow suit? They said they had a waiting list. They were literally pushing people off the list to do the advertising because of JP as the head sponsor. So something to take away from that. And then once all these sponsorships kept coming in, he said his best deal still he's done to this day was with Shopify. Shopify did a deal with him a long time ago. Instead of taking $1 cash amount up front, here's what you're going to get to sponsor, he got equity. And we've all seen what's happened to Shopify over the years. It's blown up.
Right. So, yeah, that's very similar to what I do these days. I really, it doesn't interest me to take money from companies that I like, that I think are growing. I'd much rather take equity and play the long game with them. You get a little bit of cash, but I think it's much, for if you're in a position where you can get equity in a well-run company with and again, I think it's really important also for everyone listening here is that not all companies were meant to go public. There are certain types of industries that lend itself towards, high valuations, to going public, raising money, while other industries, for example, let's say, you find a great little company that's doing $6 million in revenue and earning $2 million, and in 3 years, if you give them $5 million, they'll be doing $20 million in revenue and earning $6 million. No one cares. Like, that's not the sort of company you want to invest in, because that sort of slow growth, that arithmetic growth that's based on, hiring lots of people and just it's not like that you can go from a market cap of, 20 million to 2 billion. Like I think the big mistake a lot of investors make when they first get started, I see this all the time, by the way, venture capitalists, someone makes some money, they want to start investing, they look for the wrong types of companies to invest in. They say, well, it's real, it's doing $1 million in revenue. I like that one better than this one has no revenue. I'm like, it doesn't matter. It doesn't really matter what the revenue is. What the question is how is this industry valued? Like, how does Wall Street calculate value for this type of business? If it's not based on sales, sometimes that makes it a lot easier for you to have a big multiple on the return. You follow me? It's based in the early days. It's based more on engagement and user growth and so forth. In the case of FDA stuff, like biotech, it's based on results of clinical trials. And long before $1's generated, you could have a $5 or $6 billion market cap.
Especially so, what are the things tech, right? Especially with tech. Yeah.
So, what in that case, what are you looking for? So, if you're personally looking for investments, do you do VC stuff or you take stakes in companies?
Yep, I've done some early stage stuff. Yep. So
And what are you looking for?
the biggest thing I'm looking for, especially because of like my audience and like where I think people can promote, is one, how are you going to market? How well do you know your customer? That's what I want to know. How well do you know your customer? How are you going to market? I want to know all about the leadership. I want to know big time about the vendor. So as a banker, I worked with companies that earn $100 million in revenue at the minimum, up to a few billion. And so the biggest issues those companies had are if they had any type of like AR concentration, right? So they only have, if their plan to only seek one company out there. Because with these days, like I have a retail cereal. If we're only in Walmart, that's troubling right now, because obviously Walmart's whole strategy is to completely grind you down and get you out if you're not adhering to what they want to do. If we're only using one vendor for our supplies and they go under, especially in a time like today, we're in trouble. And if we don't have management that is literally changing their thought process on how they're managing the company and micromanaging every penny to a T, we're in trouble. So that is a huge, huge thing for me, is management and just what the product is and how well do you actually know those that are buying the product. And for me, it's got to be marketable on social media these days. Unless it's a B2B company, there has to be a play on social media, 100%.
Got it.
What are some things you look for? I'm curious.
The number one thing I look for is who's the CEO, who is running the company. That to me is like, a great operator will take a bad idea and make it okay, and take a great idea and make it off the charts. They'll take an average idea and make it terrific, right? A terrible operator will take the greatest idea in the world and grind it right into the ground. So that's just number one, is who is running the company. And not necessarily, listen, if they have a track record of massive success, that's great. Very often you can't find that because they might be young. But, I will spend some time with them. I used to have something called the furniture test. So I did VC. So I was doing VC back, in believe it or not, in 1988. I'm sorry to say I'm that old, right? So I've been at this game for a really, really long time. I used to have something called the furniture test. Yep. If a company wanted me to invest money in them, right? And, typically I'd invest $1 million or so of my own dollars and then go and raise money in an IPO a year later. That was sort of the merchant banking model I was doing, right? My biggest success was Steve Madden's shoes, right? Mm-hmm. So if you would go into Steve Madden's shoes, after they were in business for 6 months, they were in a dilapidated warehouse, okay, with old wooden desks and wires hanging through the ceiling and just utter, like, downscale, like not a penny put into anything that was related to, making the place look nice, clean, or anything else. But it was a beehive of activity and positive energy. Then I go to another company out there, and I'll never forget, it's called the Real New York Bargain. That was the name of the company. It was everything for $10. Back in the days of these stuff, that is the dollar store craze. This was the $10 store craze, right? This is back in like same period, 90, right? And I went into this company, and I knew the guy who was the operator. He was a sort of a well-known guy in New York at the time, right? And nice guy, right? And he had built up to probably 25, 30 million in sales back then, which back in the late 80s is probably maybe about 50 or 60, 70 million today, right? Sure. And I walked into his office, and it was fucking beautiful. It was beautiful. And he gave me a tour, and he showed me all of the beautiful credenzas and desks and chairs and the paintings on the walls and the state-of-the-art phone system, and it was beautiful. Like especially the I was like, wow, that's a fucking conference room. Like, you know what? You want to eat off the table and you want to just sit there because like it makes you feel really fucking important. And I was like, I would never give this guy one fucking penny.
I was hoping you would say that.
Because if this guy, if a company in that size that's growing and looking for always struggling for cash flow, if they're putting their money to fucking furniture, holy Christ. And I see this all the time now. If you see people spending money on vanity. Now, it's one thing, okay, if you own a hair salon, or a bar, that's a different story.
That's where driving your revenue, yeah.
Very different. If you're trying to build an image or it's a retail store that to come in and have a certain feeling, different story. But I'm talking, if you just go to an office and they have like, I look at the desk, I'm like, how much? Oh, wow, it's a beautiful desk. Yeah, it was $9,000. I go, I'll pass, thank you.
You're out.
It's just, it's a kiss of death, right? So
that
that's one
cereal company,
Yeah.
Jordan, I got to quickly say it's a company called Evoke Muesli. We had the meeting with him. After we had the meeting, it's kind of like a little stalkerish. I literally go into the parking lot to see what kind of car he's driving. That was one of the first things I did. And it was a
Exactly.
used Subaru. Loved it.
Yeah, it's so serious. So it just shows you the mentality. That's number one, right? That's number two. It's person and then how they spend money. And number three is the industry. I want to see how is that industry valued. Does that industry scale well? There's some industries that just don't scale. They make great little private companies, but they're not meant to be public. For whatever reason, they just don't lend themselves to being large public companies. And I think that's the biggest mistake. For example, these two guys were in a group of 10 in a breakout session I had at a mastermind. It was a big mastermind. I was running a breakout group, and there was two there. They were in the game of trying to, raise money for these nascent companies that were looking to one day go public. And they showed me the first 3 deals they wanted to do. And I'm like, guys, they're just the wrong deals. They're like, why? This guy's doing $3 million. He's a real company. He's got $3 million in revenue. They're earning $500,000. I'm like, yeah. I said, but the idea is that their growth curve, if you give them, what are you going to give them, a few $1 million? So they'll be doing what, 7 million or 10 million in revenue and earning 2.5 or 3? Nobody cares about that. Wall Street is looking for massive growth, big ideas. Now, again, I'm not just saying that the earnings don't matter, because they ultimately do. But it's so easy to get caught up in these boring industries with relatively low margins, and the top line growth is just, maybe 20, 30% a year. It's not enough to attract institutional investors or to get people that even have access to large amounts of retail investors that have some power today as well. So you want to avoid those types of industries where you just simply, with a company, if they're right, in 3 years they're doing $30 million and earning 3. It's not enough. Unless the next level from that is $300 million. So I see that happen all the time. It's the biggest mistake that people make. They try to do VC in deals that just are best off remaining private. And just remember this, anyone that's looking to invest in a company, when you invest in these types of companies, you are not looking to give a company money so the company can start making more money and start paying you a percentage of your ownership. So it's not like you buy 5% of a company and then you hope they make $5 million a year and then they'll pay you $250,000. You know what I'm saying? No, you're not looking to get like your percentage of the dividend and you're going to get rich like that. You need an exit ramp out of these 100%. Things. It's always about the exit ramp. So I'm looking. If I can find the intersection of A, great management, B, fiscally conservative in the sense of what they spend their money on, and C, in the proper industry that has an exit ramp, then that I'm like, that's like my sort of like this, like boom, go those 3 things. I'll look very closely. Then you want to see what's special about the company. Do they have special technology and whatnot? But I think that's a pretty safe way to start. What do you think? What's your thoughts on that?
No, I think you're 100% right. And the biggest thing you hit on that I think not enough people do is industry is just so imperative, because the financials of a company based on the industry will be night and day. And you talk about companies that are profitable and unprofitable. If you don't understand the industry, what that industry is going at from a multiples perspective when they are exiting, and just the profitability associated with it, you're going to look like a fool. Like if you're worried about profit, look at the DraftKings. They're already public. They're still not profitable. Huge growth opportunity if you're a growth investor.
Example.
So you nailed it.
I'll take an example. Like I was out. Are you in New York?
I'm in Nashville, actually. Yeah.
I just
no
was
state
in
income tax.
I just stopped in Nashville for a second and picked up some people here. I was on the way from east to west, and I stopped and picked them up.
You golfed with my boy Bob Menry the other day, right?
I love Bob.
He's a beauty.
Bob and the Nokes. I did Bob and the Noke boys, right? Yeah, they're good friends. So I love Bob. So anyway, I'll tell you a really interesting story here. So I was out in the Hamptons, right? And it was a nice little vacation I was taking out there. And then I had a one-day event with a famous photographer named David Garrett. We do these collaborations together, right? With myself and a Wolf and girls and like some of the Wolf of Wall Street sort of, we redos, right? It's really cool, right? Anyway, so I just was staying out in Montauk, and when I'm out in Montauk, I'm like seeing all over this. I love iced tea, right? And I'm seeing this brand of iced tea, Montauk iced tea, and it's everywhere. It's in all the stores. It's in glass bottles. It's got nice labeling, right? So I'm drinking. It's really good. I'm sitting on the beach. I see a banner fly by. I'm like, wow. And it's like everyone. So I'm looking and just it's all over the place, right? A few days later, I go and move to Southampton there, and I go on Airbnb and rent the house for one night, a beautiful house, right? And I go to the house to check in, and the owner of the house is waiting for me. He's like, oh, I'm a fan. I just figured I'd show you around, whatever. And it's a beautiful house, very nice guy. And we start talking. I was, oh, so what do you do? He goes, oh, I just wanted to talk to you about something. I'm a builder, but a few years back, I started this company, Montauk Iced Tea. I'm like, really? I said, I've seen it. He goes, yeah. He goes, I want to talk to you. Because, I started this company, and for a few years, it was doing well. And we just started growing, and I didn't really know the industry. And then I just, something happened. It just started getting real. I started getting calls from stores. Like, people were just, buying this like crazy. And the company started just, bam, went from 400,000 to $1.4 million in revenue in 1 year without any sort of, push on his part with marketing, just, a little just basic stuff. And he's all over the East End. He's in New Jersey. He's just getting started. He goes, I'd love to have you involved in this. I want to, I really think that, it's just like that. And he explained to me that the industry, like Arizona iced tea and Snapple, they've gone in a whole different direction with plastic bottles, low end, low more. And he's a sort of premier brand, ultra healthy. And I just, the instant I heard this and saw this, I'm like, winner. It's just it's a winning brand. And then you look at the industry and what's next? Okay, great. So I start to get to know this guy, and he's a great operator. Everything you ask him, he's got the right answer. He's cheap where he should be cheap, and he's not cheap where he should. When it comes to things like promotion, marketing, he's fucking ready to roll the dice, right? So I say, hey, listen, if you want me to be involved, Taylor, give me X% of the company. He's like, done. Doesn't even argue with that. So I'm like, which for me, because if I had another deal with these kids where they had a drink that had some kava in it, and they were just like, they watched too much fucking Shark Tank, and they're trying to I will give you 4.9%. I'm like, bye.
Go fuck yourself.
You go fuck yourself. You know what I'm saying? Have a nice life, right? Because one rule is I'm not having fun, I'm out.
Sure.
If it's not fun, I don't want to be involved.
That's a great rule, by the way.
It is a great, especially when you're investing. If you're with people that are not fun or just going to penny pinch you, it's just not worth it, right? So, long story short, I ended up taking a stake in this company, right? And I believe, forget that, I'm not promoting because you can't buy it anyway. It's private, so I'm not trying to pump the stock or anything like that. But the point is that, but go buy the bottle, go buy the tea because it's great. But the point is that when you look at that industry, you can see these meteoric growth spurts. So in that industry, if you hit it, and you can have the money and the brand to scale, you go from $1 million to $50 million in revenue in 24 months and have a multi-billion-dollar market cap. Like you saw with Celsius, so all of them. So it's just a matter of having a brand. So that's an example where damn, okay, he's doing $1 million and $1.3 million, whatever it might be, maybe earning a few $100,000. I don't care what he's earning. It's irrelevant, okay? Sure. He's making money because he runs the business well, but that business can, because of the nature of how the beverage industry works, because it's based on distributors. And if you want to put the pedal to the metal, it's like, boom, boom, you could be there, and then you'll get taken out by a Pepsi or someone else, right? So exactly. That's an example of a deal where, the industry itself leads to scalability. You go to another industry, someone say, hey, I got this internet marketing company. I'm doing, I train people how to open up Shopify stores, right? Mm-hmm. Or how to do e-commerce, right? And you look, wow, and I'm making $1.5 million. I went from scratch. My first year, I did $6 million in revenue, made $4.5 million in profit. Next year, I'm on track to do $12 million this year. I'm earning $7 million. I'm not interested in that. Yep, I'm not interested. You're done. There's a cap to how far you're going to go doing that before it reverses on itself. And that industry doesn't scale. I've seen so many, that was on the high end of numbers. Usually it's more like they make a couple $1 million. There are so many plays like that where they make a couple $1 million a year, $5 million, but they just can't grow beyond that. So
and it goes back to the 2 points you said, because if there isn't scalability and there is a cap, you can't exit it. You're not going to get paid. The other thing you said about the Montauk iced tea, which rang a bell with me because that's one thing I'm looking for. Know your consumer, right? Have a fucking good product. A great product. You just said they're going to keep their packaging tight. They obviously know their consumer. They probably know the income of their consumer. They know exactly where they are in their lane, and they're driving that lane. Huge points that are it's a cool story to hear too.
Listen, I could talk to you forever, buddy. I got a role here. What's the one parting advice you want to give to people, investors that are just, people are starting to get into the world? What's the one piece you think you want people to leave with? Say, just always remember you.
Yeah, that's a great point. The one thing I'm going to leave you with is break the blueprint, right? So many people live their day. They invest the way that they're supposed to because they heard it on YouTube or on TikTok or read one book. And every aspect of your life, professionally, personally, financially, break the blueprint that you're born into. And that is the blueprint that your parents, that your grandparents, that the people you swim around in your circles have instilled on you on what you should do and how you should do it. If you're not a free thinker, if you're not getting creative, if you're not bringing some type of ingenuity to every aspect of your life, your personal relationships, your professional work, or your finances, you're never going to get to that next level. So 3 words, break the blueprint.
One final question. Crypto, bull, bear?
Bull. Ethereum.
Three. Oh, you beat me to the punch. Okay, you think Ethereum number is your favorite?
Yep.
What do you think about investing in all those shit coins? Yes or no?
No shitcoin guy. If you're going to have an altcoin, think through it like a Cardano ADA. I like it because one of the creators from Cardano was on the Ethereum board, got in a blow up with them, created his own currency in 2015. So if you're going altcoin, again, break the blueprint, do the damn research, understand why, and be able to explain it in 2 minutes.
Right. With those shit coins, guys, please just be careful with this stuff. It's just remember this. Take it from someone who really knows, because I fucking know about this. These are coins that have been created for only one purpose: to separate people from their money. That's it.
Totally.
They only have been created. They're not there to have utility. I don't care what they're created to separate you from your money. And can you make money trading them? Yes, you can. You can, if you're in on the first level or two. And so I would say, if you're determined to invest in this stuff, just remember you're investing in a total scam, and you can make money in a scam without you being a scammer. In the sense, if you want to try to time the scam yourself and you're not involved in the promotion, if you're just trying to time a scam, then you got to get in right at the very beginning, and you got to get out before the beginning of the end. You got to really play that middle level here. So for those of you who are determined to invest in this stupid stuff, just please remember, you cannot top tick these shit. You got to get in and get out. I would prefer that you don't invest in them at all, but if you do, be careful, because they've been designed, they're pure pyramid schemes. They're pure as pure. And by the way, there's empowerment in that. If you really want to talk about it, it's illegal, and I'm not telling you to do it. But if you get in the middle of those things, you can make money doing it. I would prefer you don't, but don't get caught up because your hairdresser's uncle said that Elon said that this is the hottest coin. So avoid that at all costs. Hey, buddy, thank you. Where do people find you? How do they get in touch with you?
Yeah, so any social media, Jason_Tartick, and then our podcast is Trading Secrets. You can find it anywhere you can find podcasts, and I appreciate your time, man. Nice to meet you.
Let's talk again. We have a lot of stuff we could do together, okay?
No doubt. That'd be awesome. Appreciate it, Jordan.
Everybody, thanks. Listen, another great episode here. Jason Tartick, check him out. What he's doing is awesome, because he's educating people. And I think the first step to being a successful investor is being an educated one, and not just, falling for the latest. Hey, just buy this because someone else said so. All right? Take care and share this with your friends.